Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Friday, April 27th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and the rewards of trading stocks and options. We are not a service that tells you what to trade. With that in mind, let's take a look at the week that was. We did not have much going on Monday as far as economic announcements. FOMC meeting, big week for the market. Anytime we see that, took place on Tuesday, started then, and this was a week of home numbers that came out. We also had consumer confidence that came out on Tuesday, April 24th. Overall, as you look at the week to this point, we've had good numbers come out. We had a bit of disappointment in jobless claims. The big announcement came place at 12:30 on Wednesday. As we saw at 12:30, there was really not much expectations and changes coming out of the Fed. The market was improving. The economy is improving, albeit at a slower pace than they would like to see. It still is headed in the right direction, unlike some of our other countries that we're talking about, which Europe has gone back into a recession, and we're seeing some issues in some of the other third world countries too. But, the United States is the one that led us into this, and we were quicker to respond to some of the issues that took place, and so Europe will come back around. There is no expectation of a recession coming or predicted by the majority of the economists for the United States at this point. Friday morning, we'll have GDP before the market opens at 8:30. We've got our employment cost index coming out at 8:30 also with it, and consumer sentiments coming out just before the 10 o'clock bell, and we'll see whether that has much effect on the overall market. The big announcement of the week, of course, was the FOMC meeting, which we rode through without any real issues or harm coming from that. With that, let's take a look at the SPX, and we see that we are currently in an up cycle. We're getting higher highs, higher lows, and I want you to note that we've broken through our level where we were trading between this 1360 and 1390, and on Thursday broke up into this new section, and you can expect that we're going to be headed for those previous highs unless some big news event comes out to change that. The market will go where the market goes, and expectations are that it'll go back until it hits that resistance level above us. And my expectations are for a head and shoulders as this thing heads a little higher and heads a little higher. It may not head up all that high that fast. We could see some consolidation at this level and retest this support level at 1390. That certainly is within the realm of what we can see. But during the next month and a half, as we work our way into May and the end of May, we can expect we're going to set up this head and shoulders where we've got the shoulder there, head here, and then potentially another shoulder there. Ultimately, all resistance is at that previous high, which took place back here at the very beginning of April. So SPX looking healthy for those of you that are bullish out there. We've had our pullback, which would pass beyond the 50-day moving average, which from the first of the year you saw we basically only had one trend that was in the market. We're now in a sideways trend where we're consolidating between 1425 and 1360. And as long as we stay in that trend, our trend is sideways. In order to enter into an upward trend, we've got to break through this previous high, which is sitting right in here. And the likelihood of that happening and having a strong summer run, I think, is not that great. But the market's going to do what it's going to do, and it's our job to react to that. So SPX heading back to its previous highs, and we'll see whether it's going to head higher or not. Currently, the overall trend is sideways. All right, with that, let's take a look at the Dow for the week. And we see as we look at the week, the Dow came down, and on we saw the low on the Dow actually on Monday, and then Tuesday we actually saw some strength out of the Dow, where we ended up with a higher high, higher low. And then as Wednesday and Thursday came through, we showed good strength out of the Dow. Went past that previous 13,000 number, which certainly the Dow didn't have any trouble getting through. And we're lining up where we're now currently above the 30-day moving average, again in this sideways trend. Goal 13,300 out of the Dow, and it looks like we'll hit that within the next week. That's potential is certainly there. All right, let's take a look at some of the other indexes. Looking at the NASDAQ, we saw much weakness out of the NASDAQ as it dropped out of its sideways trend and actually went lower than that, well below the 50-day moving average. And we see that we then got a bounce with the Apple announcement on Tuesday afternoon, and the NASDAQ again started going higher. Why much less weakness, or a greater weakness out of the NASDAQ than the Dow? Because of Apple. Apple was having a nice little pullback into earnings, and then as Apple announced its earnings, it showed why it is the monster that it is of the stock market. The largest market cap stock out there at this point. Larger than Exxon, larger than Microsoft, larger than them all. Russell 2000 looks very much, oh, that is a picture of the NASDAQ. So Russell 2000 responded with the rest of the market, and sorry about having the wrong picture on there. The VIX, of course, went up as the market went down, and then as we saw the strength come back into the market with Apple being the leader, we see that the VIX has now gone back down to the bottom of the trading range, approaching that 1415 number. And the VIX is in its normal range where it spends 85% of its time, which is that area between 14 and 20. So not a great deal of fear in the market as we see it headed back up. And it is performing exactly as what would be expected at this particular point in the market. We're seeing congruence between the way the market's moving and the way the VIX is moving. No dichotomy there whatsoever. Bond market is back up into its range, which we had highlighted in the yellow up here. And so wouldn't be a bit surprised to see the bonds pull back as the market is pulling up. That should be our expectation. The question is, all of the floor traders feel that the bond market is overbought and should be headed further down, but they keep getting disappointments because it keeps trading in this very high range for the bonds, as the bonds are showing and have shown a great deal of strength in recent years. Let's take a look at the financials, looking at XLF, which is the ETF for the financials, and we see that it has actually bottomed out on, that would be Monday, and we see on Tuesday it started heading up. And as the market heads up, if the financials are heading up, that provides for us the kind of congruity that we generally see in the market. A market moving up without the financials is not probably a sustainable market. So we see that the financials, which in the first quarter had a great quarter as far as percentages, of course, look where they started. But the point is that as we see the financials move up, that's good strength to include in the overall market and shows a real good base for the overall market. Let's take a look next at the oil, and we see that the oil's kind of just been plodding along. So have the gas prices. I'm sure you've all noticed at the gas tank. And we don't see much change taking place in oil. And we use as an indicator for that USO, which is the ETF for oil fund in the US. All right, next let's take a look at gold, and we see that gold is still kind of hanging down there. It used to be up there around 1800, and we see now it's at 161, which indicates somewhere around 1600. So we had a little rise in gold yesterday on Thursday as the market showed a nice gain the last couple of days. We ended up with a long tail on that one. And so gold heading up just a little bit, certainly in a trend. We're kind of at a diagonal there, so we'll see whether gold breaks through that diagonal line or not. Our gold spider fund, GLD, is what we use as an indicator for that. So gold kind of holding its own around that 1600, certainly not at its highs of the year or of the last recent, but gold showing strength and popping up with the overall market. And finally, if we look at our volume for the week, we see that looking at the spiders, we see that we had a gap here on Wednesday morning. All right, that gap was indicative of the big move that took place in the market as Apple announced Tuesday after the bell. And those of you who've been watching the market, well, Apple has been the bellwether for the overall market. And as the Apple pulled back to its 50-day moving average, which you say, well, that's quite a pullback for Apple. Yeah, it certainly was looking at the way it ran the last quarter. But if you look at the overall price of Apple, the gains on it have been absolutely tremendous. And so it really controls and has been leading the market. Had Apple missed earnings or missed revenues or missed expectations, we probably wouldn't be looking at the same market today that we are looking at, because Apple certainly has led this market up far beyond what one would expect one company to lead. Remembering back in the dot-com days, you would have 4 or 5 companies that were the bellwethers for the market. Heck, now all we have to do is look at Apple and we have a good idea of what's happening with the overall market. And with that, we've got our, for our gold members, we've got our stocks to watch that we're going to continue with as the morning goes on here. For the rest of you, thanks for being here. And we had an interesting week in the market, and the week could provide a further move as we've broken into new areas. For those of you that are gold members, we'll continue with our list of stocks to watch. For more free videos for the rest of you, go to www.optionsuniversity.com/free gold. And with that in mind, this is Butch Shorak, Options University, Friday, April 27th, 2012. Market recap for the week of April 28th. With that in mind, guys, thanks for being here.